Good morning, this is Todd Hubbs, agricultural economist at the University of Illinois. Today I'm talking about my weekly outlook at trade deal and corn prices from January 26, 2019. We've seen corn futures prices and corn prices in general bounce around in a range of about 15 cents since the onset of the government shutdown. And while we've seen soybean prices respond to rumors of a trade deal, corn's been a little bit muted in their responses, and today I'm going to talk about how I think corn prices may just have as strong a response from a trade deal as soybeans as we look into 2019. A lot of this, centers on China. We've seen and heard, if anybody's been paying attention, that China said that their old supplies will be sold off in 2019 and that their stocks are getting back to what they consider a normal level after the price support programs, and they built up huge stocks from 2007 to 2016. When you look at USDA numbers right now, ending stocks comprise about 67% of the world ending stocks, but China doesn't export corn, and it looks like they're developing a production deficit in 2019 under normal growing conditions due to growth of demand. This production deficit looks about 26.5 million metric tons or 1.04 billion bushels. So when we think about where corn prices go under a trade deal, there's a really bullish environment in place. What you're seeing in this slide is world ending stocks of corn, China ending stocks of corn, and world ending stocks less China from the WASDE report over the last 3 marketing years. As you can see, when you take China out of the equation, world ending stocks are trending down. And this could get even more drastic because we've seen world supplies appear to grow tighter over the last couple of months. South Africa is suffering through a significant drought that looks like they may have an acreage reduction of about 19%. Basically acreage that they planted back in 2015-16 in their drought-reduced year. We've seen some dry conditions in Brazil. Now, about 70% of Brazil's corn production is affiliated with the second crop. But, it's been dry in many regions. We've seen soybean harvest get out due to the dryness a little bit, and they've started planting corn in many areas. So, this may be a harbinger to come of what may happen with weather in Brazil as we move through the second crop corn. Argentina's got pretty good production. I don't think we'll see that get faded very much by USDA. But all in all, you could see another 300 million plus bushels come out of production pretty easily under current production scenarios. Right now, China has a tariff rate quota in place on corn imports where it's 1% on the first 5 million metric tons, and then it pops up to 65% after that. And due to the trade impasse we're currently in, tariffs on U.S. corn imports sit at 26% and 90%. In other words, 25% on top of what the rest of the world faces. With their production deficit I talked about, you could see them slide that tariff rate quota a little bit, to make up for the production deficit. Even if they don't, if we had some kind of trade deal, 2 to 5 million metric tons or about 80 to 197 million bushels of imports from China seem reasonable under tight supply conditions in the rest of the world, and the fact that the U.S. has the world's cheapest corn right now at export terminals. So, a trade deal could be really bullish for corn, especially if China has to come back into a tightening supply corn market. Now, with all those dynamics in place, we still see U.S. exports maintaining strength this marketing year. This graph showing corn export inspections. The orange line's through January 17th and the blue line's last year. And as you can see, we're well above last year's pace. I think right now we're probably about 864 million bushels of export. We're still going at a strong pace. We may not be on pace to hit the USDA's current export projection number, but last year we saw real strengthening in the second half of the marketing year. If China comes in and prices go up, that may weaken a little more. But regardless, we're in a good position to pick up those exports if China enters the world market. That's one thing. And two, it looks like this tighter supply conditions are really setting up a bullish scenario for corn prices. Any type of resolution with China on the current trade impasse would be supporting commodity prices in general and may have some improvement for economic growth issues we see facing the world in 2019. All of this would be supportive for corn prices. On top of just corn exports in general, I didn't even have time to talk about the implications for ethanol and dried distillers grains. I think those export markets would pop too under any kind of resolution, which would help on the ethanol crush side of corn. So overall, a trade deal with corn, we could see a really bullish move in corn prices, particularly under lower world ending stocks outside of China. Well, I'd like to thank you for your time. You can find my weekly outlook and daily analysis of issues related to Corn Belt farm economics at farm.daily.illinois.edu. I look forward to seeing you around the state of Illinois.